Hello, everybody. Simple reminder, just one more day left of the trading week. Today, stocks did not fare well, and even though volume was well below average, I'm sorry, folks, the pullback is not starting off healthy. Not good. If volume would have been lower than the session before on the NASDAQ, I would have seen today as, oh, well, maybe this will induce the fear a little bit. But overall, there were very, very, very few pockets of strength today. In a good pullback, we would have seen way more pockets of strength. Nothing even remotely interested me on the long side except for AZO and ORLY, and neither one really interested me that much. And the more I think about it, AZO and ORLY breaking out to new high is indicative of not a very strong economy overall, because if that was the case, stocks like General Motors wouldn't look like that. Toyota wouldn't look like that. Instead, Toyota and GM would look like ORLY and AZO. So the fact that people are having to put parts into their junkers and they're not buying new vehicles tells you all you really probably need to know about the overall condition of the American consumer. But bottom line is, today, not good at all. So the NASDAQ down 1.15 or 1.10% on heavier volume, but even worse, the Russell 2000, big, nasty 1.97% pullback. And the NYSE down 0.93%, S&P 500 down 0.64%. Not bad overall, still holding above the 200-day moving average, much better. But the problem is, once again, wanted to see volume lighter than the session before. The mere fact that it picked up and we had such pretty ugly reversals out there and quite a few names in the market is just indicative of something just not being right. But to be honest with you, more than anything, not to look too much into it, really we are range bound. This below average volume rally, I love looking at the DIA, that volume right there, because that tells me all I need to know about this rally attempt so far. But really, we're trapped in between the February, August lows and the October, November, December level highs, basically. And until we break out of this trading range that goes from August till now, I just don't see how really we're going to trend much one way or the other as long as volume remains below average. Now, in the middle of this trading range, if we get some kind of volume move and there's signals to be taken, great. But one thing that I ran into was after this big move off the February lows, I kept asking myself, how in the hell is it possible that I'm not fully long by now? Any other strong rally attempt off the lows by now, the way that it stair steps higher, I'm fully long. And stocks are doing great. And I've got stocks already producing 20% gains in a couple of weeks. First off, I never got up to 50% long, came very close, got near there, never got over 50% during this entire uptrend. Have zero 20% gainers in 2 weeks since those February lows. CLR has been the only real winner since those February lows, and that is something that I would have never have guessed that CLR would have been the one. There should be at least a handful of 20% and a few more up well over 25% by now. So the mere fact that things aren't producing big gains immediately, another huge red flag. So today's reversal on heavier volume and with actually such an ugly break in the Russell 2000 is really all I need to know. Don't forget, the Russell 2000 broke back hard right back here in March whenever it had a down 2.40% day. So that constant theme of low, slow, steady rallies higher is a little bit inch, and then boom, big giant crashes lower continues. So this market's not healthy. That's why we never got up to 100% long. That's why I don't have any major winners. It's range bound, and if you can't swing trade these V moves, if you're not really good at buying support or what you think is absolutely support due to the market being so oversold in the short term, and or you can't short the market because it's so overbought in the short term, it's going to be a cash is king kind of market where sitting on your hands is going to really pay off so you can keep your account balance up. So whenever the signal comes, instead of having, let's say, $100,000 in your account, you only have $80,000 because you've been hacked and sacked everywhere in this range-bound market that we've seen forever. The Russell 2000, don't forget, I mean, technically, if you don't buy until something's above the 200-day moving average, I mean, you haven't been able to do anything. It just hasn't been a good market overall with the NASDAQ. So I'm not too upset by today's pullback, but I tell you what, there were some harsh moves. Now, getting to the spec name CVGI, I poked a little bit of it yesterday, really reduced my size. Only did 1,000 shares, which is under 0.5% of my account balance. But look at it immediately. Car parts are doing well. These auto part wholesale, this one doesn't do well. So once again, these beautiful charts are fake signals. Look at all the accumulation this name is under, and then compare it to ORLY. The difference, ORLY is a leader, CVGI is trash, but trash should be moving with the leaders, and the fact that it's not tells me another thing that I need to know about the market. So CVGI is a 50% sell. New final sell stop is today's low day, 240. But also CRAI, look, that one worked immediately. Big gains. Now we're basically sitting on no gains. Where am I at now? Down actually slightly. So that just sums everything up in this market. But CRAI is a 50% sell. EBIX, one of the best setups, perfect speculator name. Right here, should have started to break out and just zoom higher following these 2 big days of accumulation. Instead, now we're below the 20-day moving average. So it's a 50% sell on EBIX. And BAK is technically a 50% sell because we're still above the low a day of the signal date. But to me, I'm moving my final sell stop to 1327. Probably final sell stop will be moved up to CRAI to this low a day today. And EBIX, once again, half will be today's low a day, and then the most ultimate low of day back here, which I think is 37.94. But wow, it got ugly pretty fast. MSG has failed. That's a 100% sell. And on a speculative basis, boom has failed. I don't care that BOP's increasing, lower volume. I don't care. I don't care. I don't care. It should have been moving higher. And then NADL has failed. Once again, I don't care that BOP is max green. It shouldn't have pulled back. After this day, it should have immediately followed through higher. And the fact that 3 days it can sell off on lower volume and undercut the lows and even undercut the lows of the base on a closing basis, it's just absolutely asinine to me and just tells me that it's all about cash right now. You can't fall for this market and these V-shaped moves. You can't chase them. It's just not prudent to do. And if we look at the oscillators, I know it's really confusing looking, guys. I'm sorry, but whatever. The RSI, it's not quite super overextended, but it is overbought. And TSV, you can see while on the NASDAQ price was hitting new short-term highs, TSV was going the wrong way. MACD is moving lower now, and you can see stochastics is very overbought. So it's not like that we're at the oversold levels. And even when we were here in February, the oversold levels, one of the signs that we probably were going to bounce even more was you can see the positive divergences in these indicators off the lows. But overall, we're overbought. So I wouldn't think that this is just going to be a one-day thing. But the bottom line is things are pretty ugly. I did get one new hedge signal, ZBIO. The biotechs look like that they're just garbage. They want to break down again. I mean, they're not terrible, but definitely doesn't look healthy for the bigger names. So ZBIO is in my price volume BOP scan, so I'll keep that to a small 1% position. I'm trading very, very gingerly here, very safely. I'm losing a little bit of money here and there by just trying to even play this market on the upside. But I tell you what, I will state this once again. I would rather lose small amount of monies with my test buy than not take them at all and then see this market just pull back one day and now zoom higher 3% tomorrow to close out the week, up 3% on Thursday. So if that happens, I'll still have my long positions and I won't have acted drastically by reducing everything. And if the market does continue to sell off, I got my stops. I'll be out with very small losses in everything because I've taken very small long positions this whole way higher, and now you're seeing why. I do not trust this market whatsoever. Nothing about this market is good. The only good decision I made today was I didn't even go long MITK because I had it my limit exactly at 612, and in the morning after the first hour of the day, the low was 613, missing my limit by 1 cent. Stock was up 5% intraday. That's it, done. If it's up 5% intraday, I don't want to get long my limit order, which means it has to retrace the whole thing. Well, it did, closing down 1.14% on heavier volume. So at least I didn't take that long position. But overall, it's time to be careful. And if you really don't think it's time to be careful, look at POM. What has it done in the past month? So in the past month, I'm just picking this day here, 2/18. So since my birthday on February 18, it's moved up a total of 0.90%. However, in between that time, it somehow managed to fall at 1.20%, and then today alone rallied 26%. Yeah, fun tape. I mean, look at it back here. I mean, look at it here. This is this tape summed up to a T. Swing trade it, overbought, oversold, or day trade it. The great plays, you're going to try to find that one SIMO, the one IPHI. Good luck.